In studio with us right now is Mark Fidgett. He's a Vancouver-based mortgage consultant and broker, has over 20 years of experience. He's a member of the Verico Mortgage Network and pretty much the driver behind this fabulous website. Here's the address, www.advancedequity.ca. Now, Mark's been on the show before on Dollars and Cents. He's also a frequent speaker, talks a lot about mortgage debt and personal finance. Welcome, Mark, to the show.
Elaine, thanks for having me. Thanks for having me, Blair.
My pleasure
to be here.
Great. So I know I'll just start off. We're talking about new mortgage rules. That's the point of this segment. So there are new mortgage rules, and they're actually really new. So can we go through them, Mark, and the changes? When did they come into effect, and what are they?
So absolutely, Elaine. So they came into effect January 1st. And when we're saying new mortgage rules, it's really an expansion of an existing rule that came in last year, and it's called a stress test. So it basically now requires, as of January 1st, for everyone to qualify on the benchmark Bank of Canada rate, which is this floating rate. Currently, it's at 5.14. Previous to January 1st, it really only was applicable to the low down payment crowd. So that's anybody putting less than 20% down. So now the banks have to evaluate based on the benchmark rate, and take that payment, and you've got to prove that you can handle the 2% increase in rates.
And the benchmark rate is normally quite a bit higher, right?
Correct. It's likely sitting about 2% higher. I'm not sure how they come up with that rate, but it's about 2% higher than your fixed 5-year rate.
So it would seem to me that the government's a little bit worried. People are overextending themselves, and they're just going to make it more and more difficult to qualify for a mortgage. Everything being equal, you have a tougher time this year than you would 12 months ago.
Correct. I mean, 12 months ago, what we were seeing is a lot of parents gifting funds to their buyers, their kids, because they could bypass that 20%. And really what it meant was if you had 20% down or more, there was a lot more flexibility in the banks qualifying you. Now it's black and white. Whatever that rate is, that Bank of Canada benchmark rate, you have a payment that goes with it. If you don't qualify for that, you don't qualify for that mortgage, regardless of how much you're putting down.
And regardless of history with the bank, regardless of your credit worthiness, this is a hard and fast test.
It's a hard and fast test, and actually, it's not a bad thing. It's a conversation that I've had with my clients for many years. Like, what's going to happen if rates go up? Can you afford it? But obviously, it's something that's come in. It's new, and people aren't used to it.
So what have you seen in your client base, Mark, since these rules have taken effect?
So I'm seeing a lot more difficulty in qualifying. So, for example, I had a client who bought a pre-build, and they qualified at the time that we did the financing, basically for, they were approved for the financing, but obviously this is 2 years in the future. So we're looking at based on what we know now.
So this is like you see these big advertisements, new tower being built, barely even hole in the ground, but you sign on at that point, right?
You sign on at that point, and you're basically looking at rates at that time and saying, do I qualify? So obviously we don't have a crystal ball, but we're looking at rates today and saying, yeah, based on your income, here's what you qualify for. And then what's happened now is as of January 1st, all of a sudden, instead of qualifying on the rate they're getting, they now have to qualify on a rate that's 2% higher, which is your benchmark, Bank of Canada benchmark rate. So I've got a girl who bought this pre-build. It's getting close to completion, and now she doesn't qualify. I mean,
wow.
Fortunate for her, she's getting married, she's got a husband, she's got another income. But imagine the people that have bought pre-builds, been told they qualify, and all of a sudden this new rule comes in, and right across the board, it changes the whole dynamics.
Well, and emotionally, it's got to be pretty difficult. I mean, how demoralizing is that when you've been, anticipating this unit to become yours, and all of a sudden the rules have changed significantly? Because 2%, that's a big change.
Well, that's a huge change. And I mean, in this example, she was fortunate to have another income. But imagine you're by yourself, and all of a sudden you're told you've put 20% down on a deposit for a pre-build, and all of a sudden now you don't qualify. What are you doing? I mean, it's pretty scary times.
Yeah, absolutely. It would, that would be awful. And I have a feeling that this young woman you're talking about isn't alone, right? I mean, it's happening to everybody. And some people are going to be able to sort of absorb that and others, what do they do at that point, Mark? Just walk away?
Well, I mean, you've got to weigh your options, right? I mean,
You've got a deposit probably, right?
You've got a deposit. You've got a property that's likely increased in value, so you're not only walking away from your deposit, you're walking away from an increased equity position. I mean, and this is where the change came in, because prior to January, anybody who put less than 20% down, they were stress tested back last year. But then all of a sudden, if you had more than 20%, you didn't run into this problem. But now it's everybody. Doesn't matter. So you don't have a choice where you can go back and say, okay, well, I can get a little bit more money down. I can put at least 20% down. Now I don't have to worry about the stress test. Yeah, you do.
And Mark, even if you're putting 40% down, something like that, some significant number, you're still, these rules still apply. Is that correct?
Absolutely. And it's the flexibility that's lost.
Yeah.
When you were putting the large down payments previous to January 1st, the banks had more flexibility. So if your income was a fixed amount, but you need a little bit more, they could make it work. Now it is what it is. It's black and white.
Well, so can we talk about affordability then? Is this a good place to actually talk about that? Because that just seems to have gone out the window, right? I mean, there's some segment of the population that it's not an issue and it'll never be an issue for them, but feels like for everybody else.
Well, I think we can agree. If we're talking about single-family homes in the Lower Mainland, that's virtually impossible for most. And that's why the condo price market, there's a disconnect right now. The single-family homes are slowing, but there's still huge price range with them. But the condo market is popping. And really, that's what we would consider the only affordable product on the market. But here's where the big disconnect is, Elaine. The median sale price of a one-bedroom condo in Greater Vancouver just hit $540,000 in March.
Wow.
And when you take into consideration the average household income in Vancouver is $79,000, based on this new stress test rule and CMHC's guidelines, your GDS, TDS, the math doesn't work. It technically means that the average family can't afford even a one-bedroom home in Vancouver.
Wow. So earning almost $80,000 a year, which most people would think solidly middle class, upper middle class type of income, that doesn't get you to first base. It doesn't get you a one-bedroom condo from an affordability point of view in Vancouver. That's what you're saying, Mark?
Correct, unless you've got a huge down payment. And I don't know if you read it, but RBC Affordability Index just came out, and it states that Vancouver has the worst affordability levels ever recorded anywhere in Canada. I mean, that's huge.
Wow. So there must be something more than doom and gloom here, right? So obviously
is there, Mark?
Yeah,
is there
please tell
something
us.
more than doom and gloom?
Of course. I mean, we're talking about the Lower Mainland Vancouver area. Obviously, it's a high-priced area. The further you go out, it's the better, the lower the price is. So, of course, there's options there. There is a big transfer of wealth right now. So, I mean, there are lots of people that are coming up, younger generation, that are coming up with big down payments because the parents are selling their Kerrisdale $5-6 million home, downsizing, giving their kids some money. So it's happening and it's moving. But if we're talking about just a person who's got an average income with not a ton of savings, it's tough. You're buying outside the Lower Mainland.
Way outside the Lower Mainland.
Yeah, I didn't want to say that, Elaine. But,
but right, because, I mean, concentric circles.
Yeah.
There was a time when going to Burnaby, Surrey, Coquitlam, that's where we saw that huge bulge. Maple Ridge, new home construction was going crazy, and now you go there and you're still looking at, I don't know what a condo goes for, but I know a single family dwelling is way up there, if not at $1 million. It's between 8 and that, right?
Mm-hmm. Well, and demand has been driven up there. I mean, people are being pushed out of the downtown core. So, of course, demand in those areas is going up. So the price now, even for that product, is higher than it was, 3-5 years ago.
Okay, so there is nothing but doom and gloom then, Mark, is what you're saying. No, I know you're not saying that. But it is. I mean, it's a super challenging time for folks. Super challenging.
Yeah, and really, there's only two ways to be able to buy higher. And one is, we talked about having a larger down payment. And the other way is to bump up your income. And really, most of the time, your income is what it is. So what we're seeing is couples are buying together where they're grouping their income, maybe buying a up and down duplex where they're buying it together. So there's a little bit of creativity there. Of course, if you're on the fence and you're buying something like a single-family home, maybe it's not in Vancouver, it's further out, those places you spoke about, there's always that option of a legal suite where it might help boost you and get you over the fence there. Mm-hmm. So there's still hope. Make sure you're working with a great mortgage broker, knowledgeable one, and knows the rules. And there's opportunity still. And
steer you in the right direction. I would think that expertise, knowledge, those kinds of things are really, they're always important, but I would think in this particular situation, because a bad decision, you could just sink you really easily. For sure. And a big question that I just wanted to touch on, a lot of people are concerned about renewals right now with this with this stress test rule. And it's safe to say that right now, the stress test rule doesn't apply to someone renewing their mortgage. So that's what's happening right now. So don't worry about that when you're coming up for renewal. One of the things we have to consider is, I think the competition's going to be eliminated, because previously, if you were going to get a renewal, you could shop around. You call up your mortgage broker, see what the best rate is, and if there's a better rate somewhere else, you move. Now, if you don't qualify in this stress test rule, you aren't moving, and your bank knows you can't move. So what's that going to do to competition and to the type of rates they're going to offer you on renewal? Seems like somebody else needs to be involved here, right? For sure. Typically, you do what you do and you know what you know. So, you're going to a doctor because a doctor knows. I'd get a knowledgeable mortgage broker, even if it's a bank rep, someone who really knows what they're doing, and steer you in the right direction. And for those who don't know, Mark, does it cost anything to work with a mortgage broker? No, it's absolutely free unless you're getting into that B type of lending. Mm-hmm. Okay. Well, thank you so much for joining us. You're listening to Dollars and Cents. I'm Elaine Scollin with Blair Manton.